So I have a question from Bruce B. And he says, can you talk a little bit about short position? Say, for example, would something like BBBY, which I have on the screen, be something you would consider short, given the kind of pop and subsequent decline it has today? Does the opposite logic of going long apply for those in the descending channel? Okay, well that's a good point that you bring up, Bruce B. And it is one of the big mistakes that new traders make. Now, there is guys on the internet, as you know, that have made millions of dollars shorting these pops, mostly low-priced stocks, and just because they're either it's being promoted, it's on fluff, or just they just don't have the following that can withstand the aggressive shorting of all the traders because stocks are simple. It's supply and demand. If there's no supply and lots of demand, then the price goes up. If there's lots of supply and no demand, then the price goes down. And it's much easier for stocks to go down than it is up. Gravity takes over. If the liquidity dries up or if the volume dries up, then stocks go lower. But then it's not the other way around, generally. But one of the mistakes that new traders make is that they just short stocks because it's up. And you see this a lot in some of the other rooms where there's a zillion new traders and somebody mentions that it's up and they just go in there because they see these guys on the internet making killings shorting stocks when they don't understand, they don't understand the entry levels or what's going on, and the stocks go against them and they just get whacked. So the answer to the question, still I haven't answered yet. Let's have a look at BBY. I'm not shorting this stock just because it's up. It's up on earnings. The story's changed. This is now the front side of the move. This is not the back side of the move. When you want to short stocks, other than special situations, you're looking to short the back side of the move, not the front side. Because one thing about the front side, we don't know how high it's going to go. Look at HUNT this morning, or the other day BPTH. They both ran to $70, and if you had shorted that first thing in the morning just because it was up and kept adding to your position, you got hammered, unless you could afford to handle a $70 swing or a stock trading at 70. So that's the first thing. This is broken the declining tops line. This is a change. Stocks bounced up, came back, now is gapped up. Now it is into an area of resistance for sure. And can we scalp it? Can we trade it for can we day trade it for a scalp? Yeah, sure, why not? But why pick a strong stock when there's so many weak ones out there to short? Now, this isn't a 1, 2, 3, 4. It looks like maybe a fifth wave takes it down. But we don't know where. I mean, it could find support in here, 1650. So that's a dollar move for sure. But, it was up strongly. And if coming into the end of the day, if the institutions like this and they start taking it higher, the downside is limited. That's the problem with shorting stocks on the front side. It generally, the downside is limited because the story has changed, and this is a bullish pattern now. The other thing about this as well, you say, okay, well look, it's had this pop and now it's near the bottom of its range. That actually is a bullish chart because it's had a huge move, and if this closes down in here, it's support and holds support. The next day, quite often we see these reverse and trade back up to the high of day and actually go higher, or maybe 2-3 days of consolidation, and then they go higher. So this is a change in the pattern. I'm not looking to short strong charts. I only look to short weak charts. Now, okay, you say, well, this is a weak chart. Yeah, this intraday right here is weak, but the downside might be limited. Now, we didn't see that in the LADX. This is a different story. And what happened on this one was, as I've been saying, quite often these stocks that are very strong in the pre-market collapse at the get whacked at the opening. We saw this on the LADX. This ATOS, SRNE, but this is a different situation. These are just stocks that were up. Well, that's not a different situation. They're sort of lower priced, and this is typical of what's happening in the market, and they come off. I mean, but this is only down 21 cents on the day now, so I'm starting to go in circles on this. Let me just say this about that. The BBBY was very strong and continued to be strong in the strong uptrend. Some of those other ones that we saw came off at the opening. They really were not as strong as BBY, and this has come up now. It's got ahead of itself because it had a big short position and had, so it gets a squeeze. And once that squeeze is out of the way, then it does start to come off. But it's my personal position that I'm not shorting stocks on the front side of the move. And so I'm looking for weak stocks to short, not strong stocks. MAD. This is still a bear market. This thing could roll over and head down lower. WTW. This is a bear market, and this thing could still continue to trade lower. I mean, we shorted this at 68. Now it's 20. It's a $50 move. Why? Because it's in a big bear. BBY. It's in an area of resistance, but I'd be reluctant to short this from a swing point of view. You can scalp it. If you've took it up here where it double bottomed and maybe shorted into that, yeah, you'd be looking pretty good now on that. But and it has, it is backed off because it was up from 14 to 18, now backed off to 16. So it has recouped, or has pulled back 30%, which is it's a pretty big move, but it's just not something that I do myself. Lots of traders do, though. I mean, this is, as the talented ones, this is exactly what they're looking for, is this type of trade. Double tops, get into the trend and just stay in the trend and trade it lower. But you also hear about those guys blowing up, taking huge hits on the stocks going against them, shorting the front side of the move, trying to stay with it.